This episode is sponsored by Pattern. Shopping for disability insurance as a physician is a complicated and arduous task. It takes a lot of time and can definitely cause headaches. Pattern simplifies disability insurance for busy doctors. You get quotes, you can compare prices, and you can buy risk-free. Get started today by requesting your free quote at patternlife.com. That's patternlife.com. You can find the policy that's right for you, and your income is protected with Pattern. All Global Circle. Medical laboratories are always on the lookout for healthcare professionals who are willing to give their opinion on the latest medical breakthrough. All Global Circle offers healthcare professionals the opportunity to shape the medical industry by participating in surveys that are relevant to their specialty. On allglobalcircle.com, you can receive up to $50 of sign-up bonuses. On top of this, you'll get paid for participating in studies and giving your expert opinion. So sign up today, impact millions of lives, and check out allglobalcircle.com. Hello, everyone, and welcome to another episode of The Happy Doc. I'm very excited for our next guest, Matthew Wiggins. Matthew is a founder of Pattern, and this is an insurance company specifically for physicians. I'm really excited to dig into more about the insurance world. I'm a resident. I'm in my third year, so it's definitely something that I need to be cognizant of. And I'm definitely excited to dig in and learn more about things to look for, things that we might be missing if you're naive like me. And Matthew, can you introduce yourself to everyone?
Yeah, absolutely. Well, thanks for the introduction so far. And, I was just a dime a dozen financial planner for quite a few years and trying to work with anybody and everybody I could talk to. And then one day I said, I really want to work with a group of people who are intelligent and who will understand these things, but who invariably find themselves in a position of knowing very little to nothing about them. I wanted to really help a group of people that needed that kind of help. So I kind of scoured around different marketplaces, and I really just came to rest on young doctors. And I found that young doctors, they're highly educated, they're sharp, but there's just a gap in the things that they're taught. And so here they are graduating training at 32, 33 years of age, and they know they have the financial wherewithal or knowledge of maybe a 22-year-old. So, and they're making big decisions on contracts and insurance things, investments. And so I just thought, you know what, I think if I could make a dent in this thing and actually help some people, help some doctors develop a new pattern, have a new pattern of graduating residents and fellows that are more life and financially savvy and ready to make these decisions and get it right the first time, I feel like I'll have a fulfilling job. So, started the company, and we've grown a lot. We've worked with over 7,000 doctors now, and I'm just excited about it. If you can't tell, it's certainly a passion of mine to help out that community with the things I do know, with my specialty, if you will.
Absolutely. And, just before we started formally recording this, you talked about how important financial wellness is, right? Mm-hmm. You're having the wherewithal and understanding the tools you need to be financially healthy. And definitely that is, as we talked about earlier, a pillar to being happy, right? If you're not able to protect your assets, afford certain things, understand taxes and those types of things, it's very important. And we talked about that. So I'm really excited for this conversation. I know it's going to be great already. Before we get to all of that, what got you excited about heading into the insurance space specific for physicians? Now, you mentioned some of that, but was there any physicians in your family? Did you have a personal story, something that connected you with this situation, or?
It's a great question. It's kind of an opposite story. I didn't have necessarily any connections with doctors, but who I did have connections with were just business owners and business people. And I think what I saw was that most of them had a good business and financial sense to them. And so here I had all this knowledge. I had training from school. I had experience through advising and all these things that I do, all these licenses. And I would take them into a room full of business people and incrementally maybe help them a little bit. And so I think what happened was, as I did that, I just said, I want to make an impact with my life, right? That's how I get fulfilled, is to really make an impact in people's lives. And I just felt like the incremental impact was so small. I wanted to find the people where it could have a bigger impact. And so that's why it wasn't a personal connection to doctors. It was more a personal connection to other people that I didn't see I was really helping. And then when I started helping doctors, and you had doctors coming up at the end of educational sessions and saying, this literally changed the trajectory of my life here at the beginning, because I'm not going to sign this contract that I had, or I would have gotten the wrong disability insurance, or, I would have bought too big of a house and gone crazy with this. So I saw the difference that it was making. And that's what got me really excited about working with doctors.
Yeah. And being a physician is a really weird sort of system. It's the only type of profession where you make, most residents make around 50K-ish per year. Mm-hmm. And then when you finish your third or fourth or fifth year residency, your salary literally quadruples. And before that, most physicians have not made any real money, right? So it's this really unusual world. So insurance is definitely an aspect of that. Obviously, you know that. What sort of, and again, I'm naive to this. I haven't done all of the work yet.
You're not alone.
What services, Pattern Life or Beyond Pattern Life, what services are out there for insurance? What's important? What's not important? What's important to think about? Can you kind of give us a general layout of that?
Absolutely. And just real quickly, back to your point about the transition, I actually use the word violent. It's a violent transition to go from a resident or a fellow to an attending doctor. Not just from a financial standpoint, but the burdens and the risk, the decisions that you're having to make, the responsibilities. I mean, I can't think of another profession where there's such a violent transition. And so I think that's why doctors in particular need to be so cognizant of who they are bringing into their inner circle to advise them and to help them on things. Because it's such a violent transition. One of the ways you smooth that out is by having people who've done that with other doctors, maybe thousands of them, and they can help smooth that out for you. I can't imagine going into it alone and just trying to make those decisions without a background. So I just want you to know, I know that sounds, maybe that's outlandish, but I do call it a violent transition. And so you got to pay attention to things. Just easing into it typically is not a good way to do it. So let's talk a little bit about what you're asking me on the insurance side of things. How do you kind of wade into it, and what services and things are out there? So the role that Pattern plays is we're what's called we're brokers, insurance brokers, mostly disability and life insurance brokers. There are agents out there, and the difference is this: a broker is someone who's not employed by any insurance company, whereas an agent, especially a captive agent, is employed by one insurance company. And so if you go to buy disability insurance, let's say, and you're talking to you're talking to an agent who's captive to one insurance company, what's the likelihood that agent's going to be unbiased and really help gets what's best for you? It's not real high. They're going to want to push it. They're going to get paid bonuses, maybe even more compensation, because they're selling their product from their company. When you come to someone like Pattern or brokers, that's really important. You want to ask, are you a broker or are you a captive agent? If they're a broker, they're going to be able to look at all the different options and provide them to you. And honestly, at the end of the day, there's some fine lines. There's some people who have some arrangements where they make more from different companies than others. But for the most part, brokers are not going to have a real strong vested interest in which company you go with. And that's what you want, because you want them to give you good, unbiased advice. And so I'd say look for a broker who's not going to be biased. Look for someone who will take the time to educate you and not just make a recommendation. I always say that if you go to some insurance agent and they're giving you the recommendation almost before they ask you enough questions, they ask you like name and date of birth and they already have the plan for you, probably not a good situation. And you want them to educate you on it. And then look for someone with experience. And so if you find, I would search for a broker with doctor-specific, experience, a lot of it, and make sure that they're going to educate you and ask a lot of questions before they make any recommendations. That's really what you're looking for. Otherwise, you're looking at going and getting quotes from multiple companies directly, and then having to somehow pull them in and compare them on your own. And it's really cumbersome if you don't find a partner to help you with that.
Okay, absolutely. So point one is don't go to an agent, go to a broker. Broker is much more objective and has an overarching picture of everything. So what services or what sort of, because there's different types of insurance, right? So what services do you recommend or start to think about recommending at different phases of the game? What would you say for, for example, for me, I'm a resident, right? Very early. What services do you think I should implement now versus later versus when do you transition over to one?
It's a great question.
What do you think about that?
Yeah. So I get asked this question a lot. It's kind of like, all right, so when do I actually do this stuff? And what do I do? And can you lay out the steps? And so here's what I'll say. Anyone who talks to you about disability insurance, especially, life insurance is a little bit different. I think that if you're in a position where you're single and you're a resident, it's not quite as important to get the life insurance. You don't have any dependents and all that kind of stuff. But disability insurance replaces your income if you get disabled and can't work. That benefits you and you're still living. I mean, it's something you'd want to get even if you're single. So let's put life insurance kind of on ice for just a second. Disability insurance, if anyone talks to you about disability insurance and you say, when should I get it? The correct answer is yesterday. Now, how much you should get is very different depending on the phase of career that you're in. But disability insurance is one of the hardest forms of insurance to get. We've had doctors approved preferred life insurance who were declined for disability insurance. And so the reason is that there's a lot of things that will disable you that won't kill you. And so the life insurance is like, oh, who cares if they have this? They have chronic back pain or they have, essential tremor or whatever. Who cares? It's probably not going to kill them. Right. But that's something that could get you declined for disability insurance. So while you're as young as you can possibly be, while you're as healthy as you can possibly be, it's absolutely imperative. Go ahead and lock in a policy. Some of these companies will let you get like $1,000 a month in coverage. So if you get disabled, they'll pay you $1,000 a month tax-free. And that might only cost you $20, $25, $30 a month. But what they'll do is they'll lock your health in as it is at that moment. And then you can increase the coverage in the future, some of them up to $20,000 or $25,000 a month without ever having your health reevaluated. Wow. And so you really want to lock it. It's good to have a little extra coverage and training because like as a resident, you're probably after your employer coverage, your institution's coverage probably is only going to pay you $1,000 to $1,500 a month if you get disabled after taxes and everything. Yeah, that
sounds about accurate. Yep.
Yeah. So it's good to have the extra $1,000 of coverage, but more than anything, it's worth the $20 to $30 a month to lock your health in. So no matter what happens in the coming years, once you are later in your career as a resident, maybe you want $2,500 or $5,000 a month in coverage. That's totally appropriate. That's fine. Or once you become an attending, if you want $7,500 or $10,000 or $15,000 a month in coverage, you can get it, and nothing that's changed in your health will keep you from getting it or raise your rates. It can't be reevaluated. So really crucial as soon as you can to get something small locked in.
When you lock in one of those plans like that, how many years does it lock in for before you need to get a reevaluation? I'm assuming it's in the contract somewhere, but so right now as a resident, right, relatively healthy, no major issues, what have you, you lock in that deal. How many years do you expect to be able to lock that in or maintain that?
Yeah, it's locked in for the duration of the contract. So until you're 65 years old or 67, whatever it is that you get the policy until. Wow. So literally you could as a 28-year-old, 30-year-old, you could get a little $20 a month policy, have a little bit of extra coverage in case something happens to you in training. And then 45 or 50 years old, bump that thing up. Maybe by then you're at 10,000 a month in coverage, you need to bump it up to 15,000 a month. Right. You're going to do that without them ever reevaluating your health again. Now, some companies will ask you to do that at like age 55 or so. Right. So there are some times when you get later on, but most doctors by the time they're 50, 52, 50, they probably have as much coverage as they're ever going to get. They're sitting there on 12 to 15,000 a month in coverage. They're actually thinking more like, hey, I can self-insure now. Maybe I don't quite need as much of this. And they maybe start drawing it down. So for the most part, during the phase of your career where you're going to want to increase it, at least for the first decade or two while you have it, you're going to be able to do it without any more reevaluations on your health.
Gotcha. And for specialties, right? Like different specialties obviously have a higher risk, like, you imagine the surgeon's hands or something, right? So are the payments, and I guess my question is, with the specialty specifically, would you expect, for example, a surgeon versus a family physician, what have you? Would you expect the pricing to be different, the same? Like what's the landscape on that?
Yeah, absolutely. So let me answer that in two parts.
Sure.
I have a lot of doctors who are like psychiatrists or,
Right.
hospitalists, family practice doctors, whomever come up to me and say, hey, I'm not a surgeon.
Right.
Is this really important to me? And my response to them is, well, how important is your income to you? Because to me, no matter whether you're making 200,000 a year or $1 million a year, that income is just as important to you. And so
Right.
you absolutely want to protect it. It's just going to be a smaller policy or a larger policy.
Okay.
And yes, so that's the first thing. It's absolutely important for all specialties if your income's important to you, which it should be.
Right.
It is. When it comes to rates, the insurance companies will give you an OC class, an occupation class. So for instance, a pediatrician is going to be something like a 6M or a 6AM, depending on the company. They have different terms, but it's going to be a high number. Mm-hmm. When you get down to like neurosurgeons, orthopedic surgeons, people like that, they're going to be a 3. And so everyone else, depending on, cardiology or interventional or not, or whatever, right, you might be a 3, a 4, a 5, a 6. So that's the thing, that they actually do differentiate. And so you're going to find that the ones that typically are a little bit more they find motor skills and things like that to perform procedures. There's a lot more risk. They get disabled more frequently. They charge them higher rates. And so it ends up being balanced out. Yes, there's a less of a likelihood of a pediatrician being disabled where they can't be a pediatrician than an orthopedic surgeon, but you're also going to get to pay less and still have that income protected. So it evens out.
Okay. Yeah. Got it. Well, that was great. I love it. So makes a lot of sense. And then in terms of the insurance in general, obviously, so if you care about your income, you're going to lock in a deal, right? There's going to be different prices based on specialty. What should we look for? And we talked about this a little bit before, right? But there's different companies for this, right? There's some that are more trustworthy. I'm sure there's some that might be playing a different ball game. But what do you want to look out for in these contracts? What are things that you want to make sure are secured or stated? Do we need to get lawyers to sift through the contract? What do you recommend on all that?
It sure seems like it. When you get that contract, that's probably going to be your knee-jerk response. I need to go get an attorney for this thing because it's going to be 20 to 30 or more pages, some of them 60 pages long. And you're thinking, this is my income. I might need to go get someone to actually look at this. Most doctors don't have to do that. And I'll tell you why, because there are some things that are very cut and dry. So right now, there are close to 30 disability insurance companies in the U.S. I think it's 28 or so. And out of those 28, you've only got 6. There are only 6 that have what we call true own occupation or own specialty coverage. And what that means is that the definitions inside of their policy say that if you can't do the specific duties or procedures of your specialty or subspecialty, so the things you've been trained to do, the things you're doing on a daily basis, your CPT codes, if you can't do those things, they pay you the full benefit, even if you find another job you could do. So that could be anything from, let's say you're an interventional cardiologist and spend 75% of your time doing procedures and you get disabled and can no longer do those procedures, but you can still be a general cardiologist. These companies will pay you the full benefit in almost all circumstances. Also, if it's completely different, if you're, like I said, if you're a pediatrician and you get disabled, you can't manipulate patients anymore, communicate, whatever, but you want to go work at a library, something behind a desk, or just do something with your life, again, they're going to pay you the full benefit, even though you have another job. The other companies, and those 6 I'll name just to be helpful, and that's as of, what is this, June 3rd of 2020. Right. The 6 companies are Principal, Emeritus, Standard, Guardian, which is sometimes called Berkshire, Mass Mutual, and Ohio National. And so I tell you those because whether you come and use Pattern or not to help you look at those options side by side, that'd be great. But if you don't, at least go into it knowing you want a policy from one of the big 6, as they call them. Outside of that, you have companies like Northwestern Mutual or the AMA policy or some other big names that a lot of doctors think they can trust. But a lot of those say things like, if you get disabled and you are gainfully employed in any other occupation, it's going to take away from their payments to you. Sometimes altogether, a lot of times just proportionately. So that's the most major thing you can do, is to make sure you get a policy that covers your duties, your procedures, your specialty. And And so if you go with one of those big six companies, that's what here's what you're going to get. Otherwise, there are some riders and some features like, I'll tell you the most important one beyond that is to get your increase rights.
Okay.
So make sure they have a future increase option, make sure that they have a benefit update, whatever the company calls it. It's that guaranteed right to increase with no more medical checks. Make sure that you have something on there that protects you for partial disabilities. 70%, according to a study done by Guardian, 70% of their claims are partial disability claims, not total. Or maybe a doctor can only work, they can still do all their duties, but can only do them part-time. And so they need a partial payment to help make up the partial loss of income. If you don't have that, it's either all or nothing. Right. So that's a big deal because of the high likelihood of that partial disability. And then there's some other things like cost of living adjustments that help with inflation over time if you're disabled for a long time. Student loan rider, if you have student loans, not one we put on a lot of policies for lots of reasons. But when you get into those things, you might want someone helping you wade through it. But the hallmark thing that absolutely it's a non-negotiable as a doctor, you want to get that true own occupation or own specialty coverage. So I've just told you that you don't even have to check the contracts. I mean, you can, but you don't have to hire an attorney. Right. Just look for what I said in those big six that they'll pay you even if you can do another job.
Yeah, and it makes a lot of sense. And also, so those contracts, they generally do come with the partial, or is the partial an additional part? It's
additional.
It's additional.
It's additional. Okay. So anything that's called a rider, it's an additional attachment to the base policy.
Gotcha.
And so when you see rider, that some of them have no cost riders and for cost riders. Either way, anytime you see rider, always ask, what does this cost? And you can be annoying about it. If someone says, here's this rider, this rider, this rider. What does this one cost? Nothing. What does this one cost? Nothing. What does this one cost? Oh, that's going to be, $15 a month added onto it. So you want to make sure you understand the riders and their cost. And I would just say the non-negotiables for us, from our perspective, is the partial, sometimes it's called residual, partial or residual disability rider, and the future increase option rider on there. Those are the non-negotiables. Everything else, you need to think through the cost and the benefit, where you are in your career, all that kind of stuff.
And it makes a lot of sense. I mean, more than likely, right, you're not going to have a full disability, but there's a really high chance at some point in the span of 30 to 40 years, you're going to really injure your wrist, or you're going to get sick, or something's going to happen. And so, but it might not completely take you out, but there's going to be an effect. So I think that makes a lot of sense.
Well, and a lot of doctors are kind of shocked too, because disability insurance isn't super cheap. That's why it's so important to get while you're in training, because there's lots of discounts out there while you're in training, and fewer once you get out. There are still some, but fewer when you're outside of training. But it seems expensive when you first see it. But the statistic that has held true for many, many years now is that a doctor in his or her 30s has a 1 in 5 chance of being disabled to the point that they go on a claim with their long-term disability policy. A 20% chance. There's not a lot of other things out there you pay to insure that have that high of a likelihood. So that's why the cost and benefit and likelihood of an event, it all matches up once you know all that.
Right. I mean, and again, it's like you said, it's a violent transition, and it's one of the few fields where, a lot of family members, individuals you're supporting, what have you, are, they're being supported by that income. So it's definitely like a very powerful consideration. Now, you mentioned some of those companies in terms of the disability insurance. Do they overlap with things like the malpractice and the life insurance world, or are they completely separate? What's the...
Yeah. So malpractice is completely separate.
Right.
I don't know that I don't know that they even have malpractice insurance, these six companies. So they really specialize on disability insurance, and some of them do life insurance. In fact, I take that back. All of these companies do life insurance. A couple of them do it well. Some of them are really expensive and only offer, whole life policies, these kind of cash value policies that are super expensive. Probably, I can't think of a scenario where they were really great for a resident or fellow. So yeah, but some of them do cross over and offer good competitive term life insurance. Right. And some of them will offer discounts if you combine, but most of the time they're not bigger than the discount you get on the disability insurance for being in training, and you have to take one or the other. Okay. So most of the time, bundling doesn't necessarily make a big difference. We always say just look for the A-rated or higher life insurance company with the cheapest price, and then get the best discounted rate on the disability insurance. And if they match up, great. And if they don't, you're still better off. You'll pay a lot less in the long run if you just kind of pick them, apart from each other.
And then for life insurance, right? Obviously disability insurance makes sense whether you have a big family or you're by yourself, you want to insure that income.
Right.
When does the life insurance sort of conversation come into the picture? When do you start to talk to clients and think about when it would make sense?
Yeah. I think once you get married, it makes some sense. I think that once you have a spouse, even if that spouse is completely self-sufficient on his or her own, with their own income, nobody knows how they're going to react to an untimely passing of a spouse. And we've seen everything from a doctor who just kept right on working after the death of a spouse to doctors who say, hey, look, I'm kind of reevaluating life in general, and I just don't want to work for a year, or I want to go volunteer at this nonprofit for the next year or two, or whatever.
Mm-hmm.
I mean, what you're going to do after a death of someone that close to you when it's that untimely or tragic, you just don't know. So once you get married, someone has a vested interest in your life continuing, both emotionally and financially. So It probably makes some sense to get some coverage. But the absolute drop dead, that's probably bad use of the term, date or time that you want to do it is once you start having children, because now you've got these little lives that are completely dependent on you. They can't go get a job if you get if you pass away. And that's a big deal. So I would say some instances where I saw single people get it. If you had some debt that was private, that would be passed on to parents or to other people that you care about, you might get a small life insurance policy to cover any debt that you have. I also know that there were situations where some parents had sacrificed greatly to get their child into medical school and to be a doctor, and they were fairly poor themselves. And so the doctor said, hey, I know I'm still single, but if something happens to me, I want to pay them back somehow. And so I don't have a big estate yet. I can't pass on a lot of wealth. So why don't I get a life insurance policy to get back? So there are some instances, but most of the time, it really starts tickling your ears and becoming something to pay attention to and possibly get when you get married. And then, of course, when children come along, that's when it becomes pretty imperative.
Okay. Makes sense. Now, just ballparking here, cost. You mentioned the earlier you're starting disability insurance, the better. And obviously, as you go through that transition as an attending, the costs definitely start to skyrocket or increase a lot.
Sure.
How much do you really save? So right now, as a resident, again, generally healthy, no major issues, yada, yada, so on and so forth. What does the cost look like now per month versus the cost if I waited a little longer, became an attending, and maybe started in 10 years or something?
It's a great question. It really depends. So let's say there's these things called unisex rates for women. So this is kind of a concept not a lot of people think about, but if you think about life insurance, men's life expectancies are shorter. So it's closer to a time when there might be an insurable event that they have to pay for. And so men typically that they pay more for life insurance. On the flip side of that, there are many more things that disable women, and there's just many more occurrences of women getting disabled. So women pay sometimes up to twice as much as men for disability insurance.
Wow.
It could be really expensive. So the reason I bring that up is because men typically are going to save 10 to 20% off the price if they lock in their rates while they're young and while they have discounts and training. Women, they could save 10 to 20%, but there's also unisex rate discounts where their price gets brought down closer to the male rate and then it's discounted off of that. So it's actually cheaper than a non-discounted male rate. And they may be saving 30, 40, or up to close to 50% off the normal price. So, but if you get it while you're in training, you're young and healthy, you lock in your discounts. Let's say you're I don't know, let's pick something. Let's go back to the pediatrician. If you're a pediatrician and you need, $6,500 a month in coverage, if you lock it in while you're young, you lock in your discounts, you might be looking at $6,500 a month in coverage at $180 a month versus maybe $220 or $230 a month. So, you're looking at you're looking at 30, 40 bucks a month, something like that savings. It's sizable. If you're that same female who's a pediatrician and you lock all that in, now you're looking at paying $180 a month, maybe instead of $300 a month, or $320 a month. I mean, it could be even up in the $300s a month. So it's a big deal to lock it in. Yeah. And at the end of the day, I know that I'm an insurance guy. I love to help doctors get their insurance right. But at the end of the day, I don't want any doctor I don't want you to ever have to use this.
Right.
And I know you don't want to use it either. And so, let's make it where you pay as little as possible. So at the end of this thing, you're not like, oh my gosh, I wasted all this money. If you get it done right early with discounts, then you paid the cheapest rate you could throughout, you were protected. And if you never use it, at least you put as little into it as possible.
Absolutely. And it's funny. It reminds me of the line I say to patients often when I see them in the hospital, which is, it's great I'm meeting you. It's nice to meet you, but I hope I never see you again. Right. So
that's right.
Just the same thing with insurance, right? It's great to have it, but you hope that you never have to use it.
And I always say this too, if you don't have your income protected, what in your life is protected? I mean, everything that you're going to do in the future all relies on your income, even your standard of living, and everything. And so, it's one of those things where I never grew up saying, hey, when I grow up, I want to sell disability and life insurance to doctors, because it seems kind of morbid. Like, hey, I'm talking to you about, all day, every day, our company is talking to doctors about disabilities and dying.
Right.
Right. But at the same time, it's so important and so crucial to not only protecting financial well-being, but mental health well-being and other things like that, to have it all protected. So it's impactful. It's important. I love what we do, but it's something we hope you never have to use.
Well, look, so, from the beginning, I told you this podcast is the Happy Doc. We talk about fulfillment. We talk about good energy, making sure you're excited about the field. And again, what's not better than knowing that you're putting maybe a small dent in your income, but you feel safe and you feel like your family is going to be well taken care of. You feel like you're going to be well taken care of regardless of the results. All of us, and I talk about this on the podcast, some people we're going to get to 100, maybe a little bit more, but a lot of us are going to, we're going to die earlier than that, 80, 82 years old, however old you get, but we're not guaranteed forever. But what we can do is we can pass down that legacy, pass down that income, make sure that our family's protected. And so I think it makes a lot of sense to really consider this in the scope of, making sure that you're maintained and happy and fulfilled in the financial area of your life. So definitely really important. Just to switch gears, something I ask every guest I have on, more of some fun questions. Okay. What do you think energizes you, gets you excited to wake up in the morning?
I've always wanted to help people. A long time ago, I wanted to go into politics because I thought I had better ideas and could really help people than the goofballs that are in there sometimes. And I really wanted to help people. I spent some time working for a nonprofit organization that mentored college students. I did that right out of college. So what really gets me excited is just knowing that my life is having an impact on someone else's life and is genuinely helping them. And so I know that sounds altruistic and all that kind of stuff, but it really does come down to that. If I was just selling widgets alongside 10 other widget sellers and I didn't feel like we added any real value, I'd have to find something else to do. So I think, what I'm passionate about is when I get to be in front of a room of young doctors or even a one-on-one discussion with a young doctor. And at the end of it, they say, I had no idea. I'm going to take some action based off this. It's going to save money and protect my loved ones and my finances. And I'm just like, that's all I want to do. That's exactly right. So that's kind of what gets me energized about it.
Awesome. What would be one thing that if you could go back in time and you could whisper like a tool, a secret, a skill, a habit, something you could tell a younger self, maybe 10 years ago, 20 years ago, is there anything you wish you would have done or started doing sooner?
I think something that I at least thought I knew conceptually, but as I got into my adult life, I discovered more and more. And that is that relationships are so much more important than tasks or ego or even achievement or things like that. And I see that with a lot of young doctors who they feel like they go through the training process and they kind of get depersonalized. They become a set of duties or procedures. They're an asset to be used by society or a hospital. And they kind of feel like they've been dehumanized a little bit. And then it affects their relationships with other people, with a spouse, with children, whatever. They kind of get a little distant and they kind of feel that dehumanization. They spread it a little bit. And so I see a lot of doctors who are young, so enveloped in their work because they think that obviously that's going to fulfill them and make them happy. And I do think that a good work life where you're actually enjoying what you do absolutely adds to it. But I would just say to myself and any doctor who's listening, that the investment of time and energy that you make into the relationships of the people that are important to you, relationships at work, relationships with home, relationships at church, or things that fulfill you in that way too, they're every bit or more fulfilling than anything you'll ever achieve in your profession. And so just take that time, make sure you're investing in the people around you.
I love it. That was great. What's something you do that energizes you when you're tired or you just want to, just relax, whatever it is? What's something that gives you that energy back?
Well, I probably shouldn't say this on a podcast for doctors, but I drink Mountain Dew. That's one thing I do. I try to keep it to a minimum, but a good little jolt of Mountain Dew every once in a while does it for me. I know it's not good for me, but I love sports. I played football at a small school, small college. That's where I met my wife. She played volleyball there. So we love sports. I'd say getting outside and peppering with her with volleyball, or playing basketball with my boys, or doing anything, like going on bike rides, going for a run. Running for me was always it was a discipline issue, right? If I did something wrong in football or basketball or a sport, the coaches made you run. So the first time my wife, who is a runner, said, "Come run with me," I'm like, "What'd I do? What'd I do wrong?" I've subsequently learned to love it, because I think just that physical exertion, but doing it with someone. I love doing that with my family, with kids, with my kids. I love going to the gym and playing basketball, pick up ball with some other folks. There's something about interacting around something where you're you're playing, but it's also physical, all that stuff. I just feel like that really energizes me.
Hey, being active is so important to the body. That goes without saying for, it's not just as a physician, but just as a human. We're definitely meant to move. I was an athlete myself, so I'm on that team for sure. My hobby's rock climbing. I love doing that and lots of other stuff. I asked you lots of questions, and my final question for you will be, do you feel like there's something that maybe I did not ask you, I didn't touch on, something you'd like to impart to the listeners today?
I would say if you can remember the 3 Ds of disability insurance, it'll really help you. The 3 Ds are definitions, discounts, and deadlines. And so I have found that, especially for residents and fellows, if you keep an eye on the definitions in your contract, which I've already told you kind of a little bit about what differentiates the companies and which 6 you should go with, but making sure you're paying attention to definitions, knowing if you have discounts available and really seeking those out. Not everyone you talk to can get those discounts for you. And so making sure you're working with people who can get you those discounts, and then knowing your deadlines when those discounts run out. There's different things that can happen at different times. So I think if you know those 3 Ds, you probably got a good shot of getting this right the first time. And it is a wonderful thing to get this done right the first time. If you don't, there are lots of bloggers on the internet who are physicians who got it wrong the first time, and it turned into a blogging career because it was so traumatic and costly that they had to take to the blogs and let doctors know about it. So I'd say, get it done right the first time. If you don't work with Pattern, work with someone that sounds like us and seems like they're doing what we do, and who are committed to that doctor space and making sure docs get it right the first time.
Awesome. How do people reach out to you, Matthew?
Yeah, they can just go to our website. It's patternlife.com, and you click on get a disability insurance quote or a life insurance quote. It literally is going to take you 5 minutes to fill that out. And within 24 hours, we got quotes from all 6 of those companies for disability insurance, or like 20 companies for life insurance. And one of our brokers will sit down and talk to you over the phone and online. It's a web meeting, and they'll just go through it, explain it, just like I've done today. They'll educate you, and at the end, it's your decision, but you'll at least know what you need to do. So go to patternlife.com, request your quotes, and get this done fast and easy, and check it off your to-do list.
I love it, Matt. Thank you so much. That was educational. I feel like I definitely know a lot more about disability. I'm sure there's plenty more to know, but I appreciate your time.
Taylor, thanks for having me. I appreciate it.
And that's the episode for today. I want to thank you so much for listening to the Happy Doc podcast. Again, this is a podcast that is going to inspire you as a physician, as a health professional, as an individual, to be fulfilled in your life. So please look out for the other episodes in the Happy Doc. If you enjoyed today's episode, please leave a 5-star review on the podcasting application of your choice. You can also reach out to us by emailing thehappydoc1@gmail.com. I'll see you on the next episode.